You have a perfect credit score and a great career that's paying you great money. Should you co-sign for someone? Find out the right and wrong answer in this episode. Sturgis Credit Repair is a 5-star rated online credit repair company. We help people just like you build or rebuild their credit scores. If you have no credit history, we offer products to help you build credit history so that you never have to depend on anyone co-signing for you. If you have bad credit, enroll into our service today and allow us to work on the negative items affecting your credit scores. We take no money up front, so start our service today for free. You'll get updated through your online account as well as receiving updates through your email. For those who are trying to buy a home, we're partnered with multiple real estate agents and loan officers who are ready to assist you with your goals. If you are a real estate agent, loan officer, or anyone dependent on customers with good credit, create a free partner account with us today. You can manually send or receive clients through your online account as well as track their progress before they go to someone else. Visit our website to learn more about our services. So, you have a perfect credit score and amazing income. What could go wrong if you co-sign for someone? I'll tell you everything. So, truth is, about 90% of our credit repair clients who sign up for our service to remove negative items, or at least attempt to remove some of their negative items, most of these clients have accounts that were not actually theirs. They just have the account because they have a child or a family member or a close friend who asked them to co-sign for them. So 9 times out of 10, most of these accounts where you co-sign for somebody to help somebody else out, something always happen in the future that they eventually miss payments or a car gets repoed or a house get foreclosed, wherever the case may be. It always messes up the person who tried to do good and help out somebody that may be struggling. So I'm going to go over a few things that won't necessarily give you an answer to this question, but it will also help people out there who may not understand exactly how co-signing works. So a lot of times, if you're ever asked to co-sign for something for someone, many people think that you're just signing a piece of paper, you're just using your credit to get them approved, and the account has nothing to do with you. Well, that's a myth and also a lie. If you co-sign for a car for someone, you're also liable, for making on-time payments if the primary buyer cannot afford or just goes through issues making those on-time payments. It is also your account. You're a joint buyer on that account. So this person cannot make the car note this month. You are responsible for making that car note. If not, then that car is just going to get picked up. It's going to get repo, and now you both have a repo on your credit report. So you also have to just keep that in mind whenever you co-sign for a vehicle for somebody. So let's just go over a few things. So people who need a co-signer normally have zero credit, bad credit, or their debt to income ratio is too high. And I'm going to repeat that. They have zero credit, bad credit, or debt to income ratio is too high to get approved for a certain amount or for, a vehicle, for example. So those are 3 red flags right there. So let's just go over if they have bad credit. Clearly, they have issues making payments on some of their accounts that they already have, or in the past, they have missed payments on, similar accounts. So that's the first red flag that you need to be aware of if someone is asking you to co-sign for them because you have good credit. And keep in mind, you have good credit because you never missed a payment and you always pay back money that you borrowed. Number 2, they have zero credit. So normally this can be someone like your child, straight out of high school, straight out of college, trying to buy their first car, for an example. Yeah, that's fine, a cosign for your kid and all, but keep in mind, Most of these car loans are 6 years. You don't know what's going to happen from today and 6 years from now. That's a very, very, very long time to trust co-signing for someone. This person can have a job today and get approved, and 2 or 3 years later, they lose their job, they quit working, whatever the case may be, they get arrested or something crazy. You don't know anything about it. All you notice is late payments popping up on your credit report. The car gets picked up, and now a repo is reporting to your credit, and you had no idea. You never heard from this person again or your child again, and they just went through bad financial trouble. So that's a second red flag. Again, if it's a child and their situation, they don't have credit history because you bought everything for them, then clearly that's a different situation, and you're going to make sure the car is paid for on time, or you're just going to pay the car off within a year. Then yeah, that's a different situation. But I'm just normally just talking about real life here, where a kid moves out from home after college and you don't know what's going on in their financial life, and you're still on this car loan for 6 years. And then the third red flag is if the bank says their debt to income ratio is just way too high. It's over 40%. Well, clearly they can't afford to pay off or pay that monthly debt on anything else, because they already have a lot of bills, that's kind of maxing out their income. So if you co-sign for this person, they're going to struggle making these payments. If they make these payments on time, they're going to struggle to eat. They're going to struggle to live. So therefore, next month, they may be short on the next car payment. So that's something else to be aware of. So again, I'm not saying in this episode that you should never co-sign for people, because there are really some people who may need your help and they may not do anything wrong. But 90% of the time, in the future, a car loan is a very, very, very long time. If it's not a close child of yours or a close friend that the payments are going to be paid on time, for a fact you're going to make the payments yourself. If the payments aren't paid on time, then yeah, it may not be a bad idea to help that person out. But just keep in mind, when you co-sign for someone, you're putting your perfect credit score in danger, that you never missed a payment on. You're putting that in danger, and you're also increasing your debt to income ratio. So if you want to buy something in the future, you may not, because you co-sign for somebody else, and now you don't have enough debt to income clearance in order to finance more debt. So keep that in mind also. That's one of the biggest mistakes people make when they co-sign for somebody, is that they can't buy nothing for themselves in the future because their debt to income is too high, because they co-signed for a vehicle for somebody else. So you have any more issues regarding, how co-signing works, or if you should co-sign for somebody, or if your credit score is, decent enough not to need a co-signer, just reach out to us here at Sturgis Credit Repair, and I can help you answer those questions. If this video helped you, be sure to like it, comment, share it, and subscribe to this channel for more helpful videos like this one. Thanks for watching.